Hi, this is James Shoke with Westpac London's end of day report for Friday the 8th of June. Well, it was very much a day of negative sentiment in equity markets across most of Europe today. The aftermarket yesterday three-notch downgrade by Fitch of Spain certainly weighed heavily on European markets this morning. Also, German export figures were disappointing. In April, they fell by 1.7%, pretty much consistent with the 2% fall in industrial production we saw in Germany in April. And also we had Italian industrial figures which came out and they showed a 2% fall in April. Although Italian production IP is down 9% over the past year compared to less than a 1% decline in the German IP numbers over the past year. Spain, if I recall, was down around 8%. Spain and Italy were running similar paces of decline in their industrial sectors. The other data today included a narrower trade deficit in the US, but from an upwardly revised March number. The figures actually showed the first fall in exports since back in 2011. It wasn't a big fall, but it added to somewhat negative sentiment that maybe the weaker global economy is starting to impact on the US. But the exports fall was less than the imports fall, which is why the deficit narrowed a little bit. Canadian employment rose just 1,000 in the latest month, but that followed 120 plus thousand jobs being created over the previous few months. So there's very much an uptrend in place still there for the Canadian labour market. They are probably the main data points to mention. There's a few other bits and pieces out, UK PPI, some other Canadian data, but what I want to mention now is the somewhat surprising story that the Spanish stock market's doing really well today. It's up about 1%. Now this is at 3:15 London time on Friday afternoon. Friday afternoon often delivers somewhat surprising outcomes. What we think might have happened is that there's going to be a European finance ministers teleconference call this weekend, and I think markets seem to have taken it into their heads that some sort of Spanish bailout might be announced as soon as this weekend. That's the scuttlebutt going around the market anyway, but that's the story that I'd pass on very, very cautiously. But it's one possible explanation for the Spanish market's gains when in the rest of Europe, just ahead of or an hour ahead of the close, we've got the London market down 2/3%, the French market down 1% today, the Germans down 0.7%. As I say, Spain's up 1% and the Italian market down 1.4% today. The Dow, just before lunch in the US, is down 0.2%. Weighed down by the negative sentiment in Europe. Remember, it's official now. Europe is a risk for the US economy, according to Ben Bernanke, and so investors perhaps are looking in that direction just a little bit more than they were previously. In terms of commodity markets, quite a bit of negativity there as well. It actually started to show through yesterday and continued today. One of the reasons why equity stocks in particular have been marked lower. Copper prices down 2.4% today. Crude oil down 2.1%, looking at $83 a barrel now there. And gold at $1,578 an ounce is down almost 2/3%. And so the Aussie dollar suffered from all of this. Midnight London time last night, the Aussie was at 99.2 US cents, and it's now trading at 98.6, having traded as low as 98.2 a little bit earlier on today in the London session. Okay, so that's it for this week. As I say, watch out for this Spanish finance minister's teleconference call and any outcome from that. It certainly seems to be something that's supporting the Spanish market, but remember, we've been disappointed many, many times before when European politicians get together with high expectations prior, usually dashed. Back on Monday.